Hey guys, welcome back. In today's video, we are talking about shorts increasing demand, why Citadel doesn't want the CAD system, the $150 target, and many more in this video. Firstly, we're taking a look at this. What we've seen recently is the short interest going up to 26.11%. We're looking at 120 million shares short interest with 197 million shares on loan, along with the 100% utilization rate. So when we talk about the demand for shares for these short sellers, we're seeing it going up. And this has come at a time when we saw that AMC was on a trajectory upward. Along with that is when we saw the silver and gold market was margin calling all of these major banks, major institutions, and then we're seeing how the huge collaterals were dropping for these institutions. And so as they see the pressure going up, they feel the need to obviously borrow as much shares as they can and to short AMC. And one of the things I want to talk about is the very fact that we're already looking at this increase. You can see 126%, we're looking at 398%. The thing that we're looking at here at the end of the day is not real detailed data. What we've always talked about is how there are so many ways to avoid showing the real data. We talked about how offshore shorts doesn't need to be reported. We talked about self-reported short interest. And so when we take a look at these data, we have to remember that this is the very minimum. The very fact that we are seeing an increase is already showing that these shorts are in fact in need of shares and they are creating more synthetics. But the number that we are looking at is way bigger than what we are seeing here. We can easily times 10, times 20, or even more on the numbers that we are looking at because we know that they've sold the float so many times over and shorted the float so many times over. And another big thing is because we're seeing the borrow rate to obviously showing higher rate consistencies, which will likely be even higher, the short interest be reported by the end of January. Now, the short data in terms of the borrow rate has always been a tool used by us to kind of gauge on whether or not we know that these guys are borrowing shares. And in the past before, we've seen it go up into the hundreds of percent. Right now, it's obviously no comparison to before, but the very fact we are seeing it going up, and we know how they can decrease the interest rate, the borrow rate, because we talked about the tokenizations of AMC, and that's how ultimately they were able to get the cost rate down. And so just because we're looking at a low borrow rate, it doesn't mean that they are not borrowing shares. But the very fact that we are seeing it consistently going up is an indication that they are in fact borrowing shares. And so we should really get something off them. And we know that at times like this is when short sellers are obviously in need of shares. Another big thing that I want to talk about, which is understanding where we are with AMC. We talked about institutional ownership. By now, you should see the manipulation and suppression that's going on. We've already talked about with the short interest. We're going to talk about with the dark pool as well later on. But something that we have to understand is that when we take a look at institutions, there are also institutions like Vanguard who own over 50 million shares, who are down over 46% on their positions. And this is a pretty heavily loss, especially when their average buy price is $10.25. Now, something we have to remember is that Vanguard has already been down 46%, and this is on a major stake of AMC. But not only that, what we have to realize is that as they're losing out on AMC, as they're down over 46% AMC, they're not selling their shares to recoup or, to just cut it off, but they are actually buying even more shares of AMC. We talked about the filings before. We've seen how Vanguard have increased their positions in AMC. And so, yes, we could talk about how people are in a loss, but the very fact that institutions who are also in a loss, but yet they're not selling and actually buying, that really talks a lot about the conviction and kind of the potential there is for AMC. The very fact we're seeing these articles talking about AMC going down to zero, yet we have companies like Vanguard who continues to double down on AMC. I think that's the indication that you do want to see, and that is just showing what there is for AMC, what the potential return on investment is there. Now, do they offset that loss on a short position or through share lending? Who knows? Fintel doesn't have Vanguard listed as a fund shorting the stock, but after checking, the list of funds shorting the company has shrank, which is crazy considering the recent short interest has risen so dramatically. So firstly, we know that Vanguard isn't shorting AMC. However, they could be lending out shares. This is something we've mentioned in the past before. They could be lending out shares because we've seen in the past it is a very lucrative, especially when we saw the rates over in the hundreds of percent. Are they still doing it now? We obviously don't know, but it is a likelihood and it is a possibility that we've mentioned in the past. However, what I find very interesting is that the list of funds shorting a company has decreased. Yet we're seeing the short interest to rise so dramatically. And once again, this is what we talked about at the start of the video. Now, this is interesting because it really just shows that the short interest data we are looking at now is just, to me, made up numbers given out. And the very fact that there is no explanation for why it's gone up so much, despite the fact that shorts are leaving, it really just showcases what's actually going on. That shorts haven't left, but they're just pretending that they've left. They're giving out fake numbers and they're just trying to lie to us, and that's what's happening. And so, yes, there could be some small short sellers out. The short sellers who haven't created hundreds of millions, billions of synthetic shares of AMC, they could obviously get out. The ones who are only shorted potentially tens of thousands or, a few million, maybe they could get out. But the ones that have been in this from the very start, the one who have been creating synthetic shares over the years, who have been doing this constantly, whether it's daily, weekly, monthly, they can't get out, but they can still falsify their report and not show the true extent of what's going on. And that just showcases it from what we've talked about here. Now let's also talk about the other manipulations that's going on. Today we're looking at 86% off exchange, with over 34.8 million volume being hidden in the dark pool. 1.6 million had an effect on the market. Now you can already see how ridiculous this is. When we talk about real price action, when we talk about real price discovery, that's something we're never getting in AMC. Especially the fact we're seeing that 86% off exchange with over 34 million volume disappearing, or in this case, almost 35 million volume. And this goes back to what we talked about here, as they were afraid of this tiny part of AMC even going up, the slightest, we're seeing a 22.9%, they felt fear and they had to bring it down. This is when we saw dark pool going into that 86% consecutively. And now we're seeing the price go down. Now, is there a coincidence, in terms of what we talked about here, the dark pool usage, the short data going crazy, and the fact that short companies are supposedly leaving? Of course there is. And it just showcases the manipulation. It doesn't even stop them, because yesterday, we saw 74% off exchange with 24.95 million volume hitting the dark pool. And it really just goes on. It's getting extremely ridiculous because they're just trying to hide as much volume as possible. Yesterday, they were already hiding away 25 million. Today, they've hid over, and this is even when the market has closed. And so they've already hid, before the market has closed, over 34.8 million. And so we talked about this, the reason why they do this, and it really just showcases that even the slightest move, even a 10%, a 20% is already making them panic. So this is why we've said, if AMC was to go up back to 240, back higher to $3, even these 50%, that will start putting their losses in the astronomical levels. And then when you talk about 100%, 300%, 500%, and remember, that's tiny in comparison to where AMC should be, but that's huge in regards to the losses that these short sellers will be having. And so that's what we've said with what's going on. And you can see here, now this is an extremely old post, but yesterday we talked about how Citadel wants to sue the CAS system. And this is just an example of why, because back in 2023, you can see what would a consolidated audit review of August 23rd for AMC shows: 0 shares available to loan for an entire week, 50 days on a threshold security list, and Wall Street summons 52 million shares they didn't bother to locate. So this is exactly what CAS system is theoretically meant to solve. With things like this, the reason why the short sellers were abusing this, a few years ago, was because there was no such thing to catch to call them out. for the transparency of the market, so they could get away with it. And this is an example of it. Now, the CAD system is supposed to do that. Of course, whether or not the SEC is going to fully implement it and help the retail is a different story, but you can understand why Citadel wants the CAD system to be gone. Now, in terms of some technical analysis, and of course, we've always said this, there's a lot of things that affects AMC. I do believe that technical analysis is not kind of the ultimate thing, but it is a good sign of sentiment and kind of psychological levels for AMC, is that we are seeing some bullish setups being made. Now, whether or not this is obviously going to play out is a different story, because at the end of the day, technical analysis isn't going to be the countless manipulation they've shown with 34.8 million shares being hidden, because this is what's required to make the technical analysis to work. Technical analysis is showing the price, is showing the volume, the price actions, and if we're getting that price hidden, if we're getting the volume hidden, the technical analysis is not going to come to fruition. However, it's still a good gauge that we can use, and we're aiming for that target of $150, which I've already said should be the case, even without a squeeze, because that's where real price discovery should be for AMC. Now, another thing that we're looking at, it's obviously a bit different now as the share short is increased, but AMC has 150 million cap on what they can get through selling shares. 100 million shares sold at what will likely be around 150, it costs 150 million. Whoever is getting those shares sure worked hard to control that VWAP. So we've talked about how the share offering and the price of shares worked. Now, what we're seeing with this is, of course, the fact that these short sellers are always trying to manipulate the price. We talked about this. They want to minimize as much money as possible with the ability of how AMC can raise their cash. And so when we see this, we know exactly what's going on. It's everything that we've just mentioned with the short interest, with the dark pool, is for right now the sole purpose of not allowing AMC to raise money. But previously was because they were already facing heavy losses with AMC going up 20%, or at least for one batch of shorts, they were facing heavy losses. And when you account for the billions of synthetics out there, it's obviously very hefty work. Now, another thing is that AMC has shown their earnings or the finance of the fiscal year of 2025. Now, some things to look out for is, of course, what we talked about with the 2029 note. Another thing is for AMC, we can see total revenue for the 3-month ended December 31st to be approximately 1.28 billion compared to the 1.3 billion from last year. So what we saw was that actually Q4 this year was lower than Q4 last year. But when you look at the full year, we were actually looking at 4.8 billion compared to the 4.6 billion last year. So you can obviously see there's some give or takes here in terms of what's going on. Now, one of the things that needs to be talked about as well is the net loss has seen a decrease as well, which is something that we'll look out for. The cash and cash equivalent is at 428.5 million. And this was done with the sales of Highcroft as well, which is included in there. Bear in mind, they still have the warrants that they are able to exercise, so they are still making profit. And with silver prices going up right now, we could see Highcroft price go even higher, and of course AMC to make even more profit. If you want to know more about in terms of what's going on right now, is that we're still seeing people doubling down on the silver shorts. However, silver spot in China closed at $130 per ounce today. Now, I strongly believe that currently the Chinese market for silver is the leading indicator. As long as we don't see the market over there collapse, whatever happens here right now does not matter. They can bring silver down to 112, but eventually real demand will bring it back up and even higher. You know, we can also see how they're trying to bring the SLV down. And the very fact they're doing this is because they are afraid of the gamma squeeze. They are afraid of what's going on. And so it really just further confirms my belief of why I think the silver price is going to go up. We talked about this, it goes up even higher to 149. The premium goes to $41 right now. So if you want to ask whether or not I believe the price of silver is going to go higher, the answer for me is yes. Even if the price were to stay up for at $149 in Shanghai, as long as they are able to maintain that price, this premium will have to go down. And this premium will go down not with the Chinese silver prices going down, but with what we talked about, comic silver prices going up. And so that's why I believe it will further go up. You can see massive US bank is selling, Shanghai is trading 114. The price difference between what the US naked short bankers are selling and Asia has blown out big time. And it's eventually only going to be a problem for them. But then not only that, what we're seeing is how, after not stealing the show from the Fed, the Bank of Japan pulls the trigger on its weekly YCC operations, printing 1.05 trillion Japanese yen of liquidity to repurchase JGBs. And so this is also another big major factor of what we said could cause the market to collapse as well. And ultimately, if we are able to see this go down, not that this is something that we're obviously wishing, but if we do see this go down and we see the whole overvalued stocks go down as well, that's hundreds of billions, if not trillions of dollars of collaterals disappearing. And that's how AMC will thrive. As always, none of this is financial advice, so do take us a grain of salt. Make sure to do your own due diligence and research, and I'll catch you guys next time.